Good morning, afternoon, and evening, whatever it is in your time zone. This is Edward with Crypto University, and in this video we are going to be breaking down a nitrous bull indicator, what the colors mean, what the lines mean, how you can use it to find areas of profitability, and when to get in and out based off of these signals. First of all, we need to understand what the candles mean. So whenever we have these fully green candles here, this is an area of strong upward momentum. If you are looking at a candle and it is completely green, like in this scenario here where we do have a bull call, and the next candle afterward is very green, this is very bullish momentum, very strong upward momentum. Here you can see another completely green candle, another completely green. So these are strong upward momentum candles. So now if they're green candles with red wicks, it means it's strong upward momentum, but it's not as strong as one of these here. So if you can see the difference between this candle and this candle, this is completely green, so it's very strong upward momentum candle, and this is a green candle with red wick, right? If it had a wick, here is the wick below, here is a wick right here. So this is an example of red wick. So it still has strong upward momentum, but it's not as strong as one of these completely green candles. So then we have an orange candle, right? So the body of the candle is orange, as well as the wicks. So everything about this candle is orange. Everything about this candle is orange. Let me move the cursor so you can see the two. So this is saying that the trend might change. This is a candle that is losing its momentum. So here we have a very strong bullish candle, followed by two strong bullish candles, and then we have an orange candle. So this is a disruptive candle. This says that the trend might change direction, that we are losing momentum. Then it's followed by a very strong green candle, very strong bullish candle, and there you see another orange candle. So this is indicative that the trend is losing strength. Now you need to use these candles in conjunction with each other. Don't just look at one candle and try to base your decision. Don't just look at the signal and try to base your decision, right? Because as you can see here, the candles do continue to turn very bullish. So it's important to use past information in a way that you can use it to shape your future decisions. So now if we have red candles with red wicks, such as this one, this is a green candle with an orange wick. This is an orange candle. Now we have red candle with red wicks. So this is strong downward momentum, right? This is very strong downward momentum. Now, if you have a purple candle, this means weak upward momentum. So it means people are buying the dip, right? This is a dip, as you can see here. And this is a purple candlestick, which means it has upward momentum, but it's very weak. Here you can see again, a purple candle comes after a series of red candles. So this is, again, upward momentum, but it's very weak. As you can see here by the top of this candlestick, the wick was indecisive. So reading candlesticks is another art completely, and is outside of this nitrous bull indicator video. So I'm just going to tell you briefly. As you can see here, the price traveled up to the high of this wick and was rejected. The price traveled down to the low of this wick and was supported. So here we have an indecisive candle, and that's displayed by the color purple or maroon, whatever you might call this here. This color means that we have weak upwards momentum. So now that we understand what each color of them means, we can actually start to use this in conjunction with each other. Now I'll fast forward over here to where the current price is. So this line is not to be confused with support and resistance line. This is the current price. So if we zoom in on this, we can see here this is the current price, and as price goes up or down right here, that line changes. The numbers change, the lines go up and down. So this call tag right here is also purple right now because it has weak upwards momentum. These are weak upward momentum candles. So it says that yes, there is upward momentum, but it's very weak. And this line right here is going to follow the current price. As you can see it going up and down, it will give you the current price. So these other lines here that we have, as you can see here, we have a red horizontal line. So this is actually resistance. Nitrous Bull provides you with resistance on whatever time frame you're looking at. In this scenario, we're looking at the 4-hour time frame. and this is resistance. Now we have a green horizontal line, and this was an area of previous support, right? So we have a couple support lines down here, and we have some other support lines down here that may not seem to serve a purpose, but if you backtrack the data, you will see that actually this was an area of support and this was an area of resistance. Once it's flipped, resistance becomes support. So at first it served as resistance here, and then it became an area of support later. This was first an area of resistance. It was first displayed as red, and once flipped, right, became an area of support. So then we tested it here and we tested it here. So as you can see, what was once resistance later becomes support. So now that we understand what the colors of the wicks mean, the colors of the candlesticks, and now that we understand what the horizontal support and resistance is, let's take a look at the bull and bear signals. So if we pull back into this area, for example, so here we'll look at this bear call, and we could see that from the candlestick's close, right, because Nitros Bull will give us the signal once the candle is closed. And you can change this in your settings, but it's best to go once your signal is closed, right? So here is the close of the candlestick right here. So if we take and measure out down to the bottom of the next candlestick, we have a minus 10% area. So you could have shorted this from the close of this candlestick, right, because that's where your signal would come from, all the way down to the low of this candlestick. So that is our area of profitability, and this will be different based on every signal, right? It will be different depending upon market situations, and sometimes the signal may not line up in a proper spot. So let's take and measure now from this bull signal, meaning we would have got the signal right here when this candle closed. So if we wanted to gamble on the next 4-hour candlestick, you can see the price comes down and explores the low of this. Ultimately, it went up as well, right? So even if you just wanted to play the very next candlestick, you still would have had an 11% profitable area. If you would have opened your trade based off of this signal, which was right here, then you could have rode this up for a possible 11% in the next candlestick alone. And if you held it all the way up, you could have went up to 15%, right? So based off of this bull signal here, right here, when this candlestick opened, you have this area of profitability. And of course, you can still, if you were able to read and knew what the colors of Nitros Bull meant, you might have been able to ride it up higher, as these were all green candlesticks. Even though they showed some indecisiveness in price, you still could have rode them up higher. Knowing this, that this is a strong upward momentum candle and that these are losing momentum, you might have chosen to get out of this trade. However, you still could have rode it up for a much higher area of profitability to the next bear signal, as we didn't have a bear signal displayed till here. Sometimes the distance between the bull and bear signals are not that great, and sometimes they are very immense. It just depends on what the market conditions are. So from this bull signal right here, from this candlestick close, all the way to the bear signal, which would have been this candlestick close, you could have got 76%. If you rode it all the way up to the top where the resistance line would have been generated, that would have been an amazing 141% over 6 days. 6 days would have yielded you over 2x your account, right? Because 100% is 2x. If you make 100% gains, you have made 100% of the money that you invested in that coin. So you have made 2x. This is over 2x here in 6 days based off the Nitros Bull call. Even if you did not take out at peak and you rode it and you say, you know what, this trend is losing momentum. I can tell that the trend is losing momentum based off of these candlesticks now because they have changed color, right? Because we talked about how the color changes matter in this. So then here's our bear signal once again, and right here is the close of this candlestick. So that means our bear signal would have been thrown right here. So this is still a 76% area of profitability, and that's not always the case. As you can see here in this window, in this time frame, we have a bear signal here, and it's much smaller area of profitability. So here we have a bear signal, which means that you would have tried to take a short opportunity. So from the candlestick close all the way back down to the next candlestick, there's only a 1.95% area of profitability, right? If you would have opened a short based off of this signal, then your area of profitability would have only been minus 1.95%. So in this example over here, based off our bull call, we saw a lot of profitable area. This one that we were just talking about over here. This was a huge area of profitability, but that's not always the case. So basically whatever I tell traders is that they need to be concise in their area of profitability. You shouldn't always try to shoot for 10%, 5% in a cryptocurrency market. Yes, they're very volatile and it's possible to make that amount of money in one trade, but realistically you should only shoot for about 0.25%, which is 0.25%, or even less. Sometimes only myself, I shoot for 0.2%. In which case I will, raise my stop loss later and chase a trade as it continues to develop, which is known as dynamic trading. But we're not going to get too into that right now. What you need to do is use these as areas of profitability, right? So based off of this bear signal here, we know that we can take an entry here on this trend line, which is a short entry because we're looking at the bear signal, and we could write it down from this. So if we enter at this line, we can hope to write it down here. And now as we see here, this is the bottom of that bear signal wick. So this is a safe trading range. And lo and behold, right, you actually could have made profits in this area. This was where the bear signal was thrown, because this is the close of the candlestick. And this is the bottom of that candlestick. So if you were to use this as an indicator, you have to use the indicator to the fullest extent. Don't just see a bear call and jump in thinking you're going to make $1,000. Learn to use the indicator for all the value it has to provide. So if you were to take your short from this line, as we stated, to this line, you have an area of profitability, right? You just did not sell at the right time, or you wanted to shoot for a much larger profit percentage. And realistically, you should know how to map an area of profitability. So this would have been a safe profitability range. So let's take that same concept over to a bull signal now. So based off of this bull signal here, this was the close, which is where you could have put your entry. And this is your high of the candlestick, which is where you could have put your take profit goal. So zooming in on this now, we see that we have an area of profitability from our entry, because here's our bull signal, right? So the bull signal is thrown after the candlestick close. So here would be your entry, and riding it up to the next line, which is where the previous candlestick reached a high. So that is where you draw it at the top of your wick. You would have had a 2% area of profitability, right? So you could have walked away from this trade pretty confidently knowing that you can make about 2% in this trade, which is far greater than 0.2%, but still reasonable. So of course, if you were to ride this up until the next bear signal, again, we discussed that, you would have made a lot of money. So that is how you can use Nitros Bull as a signal, right? It's not a trading command. Just because you see the signal bull being thrown doesn't mean you need to take a long forever. It's not an infinite long. You cannot see this data before it is displayed. And just because a bear signal is thrown does not mean you should just jump in on the trade. It's simply a signal, right? It's simply a signal. So here's the current one that we have, the current bear signal that's displayed. So let's take a look if you wanted to try and trade this. Here is the close of your candlestick. So the bear signal was thrown after the candlestick closes. So this is where your entry would be on your short. Now you see the bottom of this wick here. So that is an area of profitability for your short. You can be pretty confident that you will get down to that area of profitability. And as you can see from the candlestick information here, you can see this was the open and price did in fact travel down, not all the way to that low, but it came down to right here, which is minus 3.44%. So it didn't shoot all the way down to your area of profitability. However, there still was an area of profitability of 3%. And if you're not being greedy or trying to make $1 million every trade, which just isn't going to happen, then you will find plenty of opportunity, as your 0.2% would have been here, and you even could have chased it down with adjusting your stop losses all the way to 2% and even 3%. So adding on to this, you need to use multiple time frame analysis, which means you need to look at smaller time frames, right? So as you can see here, that same area where we were just looking at, where we had received a bear call, as you can see, this is where we put our short entry, and we still could have made down right there, right? But price continued to go up in a different direction. So as we just saw on the 4-hour time frame, we're in a bear call, right? We are in a bear call in the 4-hour time frame. But if you look into the 15-minute time frame, well, what do you know? We have a bull call now. We have a bull call, and you can chase this bull call right here. So this is where price currently is. You could chase this bull call from the close of this, so it would be right here. This is the open of the first candle after the Nitros bull call, and chase it all the way up to resistance, right? Because your resistance here is plotted for you, and it's easier to understand short and long-term resistance and support on a smaller time frame. So do not neglect multiple time frame analysis, because there will be multiple bull and bear indicators within smaller time frames. So now, talking about how to read the candlestick colors, what the horizontal lines mean, how to get in and out after a signal, discussing the area of profitability, we're going to talk briefly about alerts. So don't forget that you don't have to stare at the chart 24/7 to be profitable. You can set up an alert. Right now we're looking at Matic USDT. So let's go ahead and put for our value Nitros Bull, because that is the indicator that we have on our map. So now we will put to crossing. You can leave that alone, and you will set to either bull or bear. Right down here in our plot we have bull and bear. So if you want to get alerted on a bull call, you'll click bull. Since we are currently in a bull call, we can go ahead and select bear, right? Because now that we're in a bull call, we're going to want to be notified when a bear signal is thrown, so we can escape our trade or look for a short. If we're in a trade, we're going to want to get out, and if we're not in a trade, we want to take a short when the bear call is thrown. So we'll go only once. You can set this to whatever you want. I will choose only once. Our expiration time here, I'll just go ahead and put that to tomorrow. So if this signal doesn't get thrown by tomorrow at this time, 24 hours from now, then I'm going to wait and look for a different setup, because if 24 hours passes by, the signal you were looking for may no longer be valid. So you can notify on the app, or if you have the app, you can show pop-up, you can send email, or if you have 3 commas, automated trading, you can actually connect this to your bots with a webhook URL. But you'll need to check out our automated trading course for that information. We're just talking about how to use Nitros Bull manually on this video. So then you'll say Matic bear call. There you go. So you'll name your alert, and you can create. So now whenever we get a bear call on Matic, as you can see, we're currently in a bull call. Whenever the indicators, when the momentum changes and Nitros Bull displays a bear signal, we will get an alert for that bear signal. So that is a walkthrough of how to read and use Nitros Bull indicator. I hope that video helped cleared up some of the questions you may have had or the problems you were experiencing, and I wish you the best of luck in your trades.